Mihir Vora is with us. He's Director and Chief Investment Officer at Max Life Insurance. He's joining us to take some questions. Mihir, good to have you with us here. Thank you very much for your time. Are we, first of all, just a quick view on earnings, which you're watching closely. How are they tracking? Will they lead to a little more optimism on the upcycle, which everybody is betting on? Or will it puncture that narrative, that optimism? What's your sense?
It's been a decent earnings season, not very great, but if you look at the two big sectors, banks have done very well. Financials and banks results were quite good. No issues about NPAs, margins, and doesn't look like there'll be any issues, at least for the next few quarters, for banks and financials. So that was one bright spot. IT, of course, disappointed. We did see some downgrades, and that cycle, I think, is likely to continue. And on the consumption segment, which is discretionary as well as FMCG, we did see some signs of margin pressures easing out. So that's one hope that we have, that in the next few quarters, the margin pressures for consumption stocks and consumption durables as well as non-durables should ease off. And hopefully, if we have a good monsoon and the rural piece picks up, then we should see a decent performance by the consumption pack. So I think mixed bag, but going in with a bit of optimism for the next few quarters.
Okay, by the way, this market, it may look flat, but beneath the surface, there's plenty of action taking place and the market is in a mood to reward good earnings. Amber Enterprises, we were talking about that, 13% higher now on that stock, big mover in the broader markets. Credit Access Grameen, the street definitely likes the margin expansion, so 7% higher now, 8% almost on Credit Access. And a couple of other names, something like a Max Health is up 2.5%. Cyient, which reported good numbers a while ago, is up about 3.5%. Dixon Tech is up about 3%. So lots of stocks coming back in the broader markets. How are you feeling about the market now, Mihir? Is this a market you think that has more legs to the rally? Is there enough to sustain on the upside?
I would say for the larger caps, there is still some upside left in terms of valuation comfort, because we are almost flat versus for the last 12 months, which means that while earnings have grown, the markets are still at the same level. So valuations relatively are much more comfortable than we were 12 to 15 months ago. That much I would say for the large caps. In the mid cap space, while it's not good to generalize, but in general, I think there is a bit of valuation froth that has built up. So yes, there is some valuation upside in the larger caps, while the mid caps may be a bit more limited.
Hi Mihir, good morning. Mihir, how do you approach the two-wheeler space? Bajaj Auto has come back in style. Now, hopefully domestic demand remains more or less constant, and exports, which were down and out a few months ago, the management has suddenly started talking about a revival out there. How do you approach the two-wheeler space?
So two-wheelers, I think you're right. The domestic market has still got to pick up, and there is some hope on the exports front. But in general, in automobiles, we have seen that product launches, whether it's in cars or four-wheeler, cars or two-wheelers, product launches make a big difference. So even though the segment might not grow as well as we would like it to, there are cases where individual products or individual segments do well. So I think companies really need to innovate and do the right thing. EV is another strategy that companies need to use, and we have seen that two-wheelers companies have been losing market share to the EV segment, and there are some plays in the EV segment. So those are some of the themes that I would play in the two-wheeler space.
Okay. So since we're talking about two-wheelers, EVs, let's talk about the lenders as well, because many of them have done exceptionally well, whether it's something like a Chola or, even talking about what we have in the here and the now. I mean, Credit Access Grameen, for example, a slightly different space, but very strong growth. Disbursements have grown almost 25%. How are you looking at this entire piece, and what would be your pick of the pack here?
See, for NBFCs as well as for banks, the biggest driver for credit growth in the last many years has been retail, and that trend continues. What had happened in the last, I would say 12 months or 15 months is that because of the tightening cycle, NBFCs had become a bit more, cautious or reluctant to grow fast because of the funding cost going up, while banks continue to do very well. But now with funding costs, no longer an issue in the sense that we are probably past the peak of the tightening cycle by the RBI, even NBFCs should see the worst of funding issues past them. So I think it's a matter of time, and we are seeing NBFCs also getting more aggressive as things ease off on the liquidity front.
We were talking about, Nigel was pointing out Amber, which was up 12-13% at the back of results. Keynes is another one, which is up 13%. That's in the same space, electronics manufacturer, which is at about 11.30 with a 13 to 13.5% move. That's not Keynes, Kaynes. That is, doing very, very well. So Dixon, of course, is the old granddaddy of the space. It's up 3%. So that's a space to keep an eye out on. Varun Beverages, by the way, is another one. That's the one, Keynes Tech. Varun Beverages is the top volume-led gainer today with a 2.5% gain. 14, 16, 15 is where that is. Sonata Software saw a very large move on the back of strong earnings. We had the management with us yesterday. That's up 1.5%. Triveni Turbines, huge performer. That's up another 4%, 400. So lots of new stocks into the mix. Vesuvius India was limit up, by the way, on the back of earnings. That is up another 5% this morning, 2,400. Cyient is coming up with a 3% pop. Suryodaya is up about 5%. Coromandel is up 3%. Saxsoft is up 4%. So once again, I mean, even though the Nifty is not doing very much, the broader market, is really throwing up lots and lots of ideas and lots of action, really. Mihir, you did say that maybe time to be a little more cautious there when you go down the market cap curve. Is there a very generalized kind of a view, or are you seeing exuberance in certain pockets one needs to be careful about, or is there a broad valuation call?
I think, of course, in mid caps and small caps, you really have to look at it stock by stock. So it's not very nice to make a very general call on that category. But if I look at the numbers and if I look at the proportion of stocks which I believe are overvalued, it is higher in the mid cap segment, especially in the next 50 to 100 kind of level. Because I think if you look at the markets over the last many months, they have been driven mostly by domestic flows. And I think a lot of money is coming into the mid and small cap funds, or at least the diversified flexi cap funds. So to that extent, I think a lot of money has been chasing through the mutual fund route, through the PMS or AIF routes in the mid and small caps, which is probably leading to a valuation cap.
All right, Mihir, before we let you go, we have got some insurance data that came out yesterday. And LIC continues to falter out there. So what's your view on the insurance space? Most of them have come off considerably because of the changes we saw in the budget. And a lot of selling is what we've seen as well. Is it time to allocate some money to any of them?
Yeah, obviously my view would be biased. But overall, I would say that we should look at the longer picture, and financial leisure savings is a reality. Money will flow into investment products, whether it's through the mutual fund route or the insurance routes. In insurance, you of course have the bigger upside or the bigger potential, which is protection. India continues to be a highly underprotected market. So all those macro factors are there. We have seen setbacks in the past. A few years ago, a similar tax breaks were taken away for the ULIP segment. But beyond a few months, we did not see any blip as an industry on the sales of ULIP products. So I think broadly we have to consider that the industry is self-sustaining and is a growth industry even without tax offs. And if that's our belief, then I think the short-term issues should not matter. And stocks have corrected, valuations have become more attractive.
Okay, all right, Mihir, we'll let you go on that note. Thanks a lot for joining in and have a good day. That's the word coming in on the market, which, by the way, is so very quiet.